You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, January 23rd, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Wednesday. First thing to know is U.S. futures pointed to a higher open pre-open. U.S. stock futures were slightly higher after reports that the Senate will vote Thursday on rival proposals to end the partial shutdown of the federal government. Elsewhere, European stocks were mixed with no clear direction, while markets in Asia closed mostly negative against the backdrop of discouraging trade news. Earlier, the Bank of Japan shaped its forecast for inflation this year, reassuring markets that its monetary policy will stay easy for the foreseeable future. Markets were also supported by a rise in the yuan after fresh action from the People's Bank of China to boost domestic liquidity. Second thing to know today is there's an update in the U.S.-China trade dispute. Advisors to President Trump said he won't soften his hard line on trade with China just in return for a promise to buy more U.S. goods. U.S. Trade Representative Robert Lighthizer said the administration wanted Beijing to move on more structural issues such as intellectual property theft, and forced technology transfers. Officials also had to deny reports that the White House had refused to meet a lower-level delegation ahead of Vice Premier Liu He's visit to Washington, D.C. next week. The third thing to know today is United Tech, P&G, and Comcast highlight pre-market earnings. 2 more Dow components report ahead of the opening bell, as one of the busiest weeks of the fourth quarter earnings season continues. United Technologies is due to report results at 6:55 a.m. Eastern Time. That's out. On average, analysts expect that it earned $1.55 a share on revenue of nearly $17 billion. Consumer product giant Procter & Gamble was then set to release its results at 7 a.m. Eastern. It's out. It was forecast to report a profit of $1.21 per share and sales of about $17 billion, according to estimates. And cable heavyweight Comcast is on the calendar as well. Analysts forecast that Comcast had a profit of 65 cents per share in the latest quarter, with revenue of about $27.5 billion. Fourth thing to know today is Ford results are due after the bell. Things will remain very busy after the market closes, with Ford due to release its latest earnings report. The automaker is expected to report adjusted earnings per share of 32 cents on revenue of $38.63 billion. Joining Ford after the close will be Texas Instruments, United Rentals, Lam Research, and Las Vegas Sands. And the fifth thing to know today is oil prices tick higher ahead of API reports. In commodities, oil prices ticked higher ahead of the release of fresh weekly data on U.S. commercial crude inventories. The American Petroleum Institute is due to release its weekly report for the week ended January 18th at 4:30 p.m. Eastern. That's amid expectations of a drop of 435,000 barrels. U.S. West Texas Intermediate crude futures were up 46 cents, or around 0.9%, at $53.48 a barrel. Meanwhile, international Brent crude oil futures rose 59 cents, or 0.95%, to $62.09 per barrel. The second story we have for you today is from NASDAQ.com. Government shutdown impacts ETF industry. The government shutdown, which includes the Securities and Exchange Commission, has had an impact on ETFs. ETF.com's Lara Krieger reports that delayed or suspended approvals, as well as uncertainty over the status of pending filings, are just some of the ETF-specific problems being seen. The longer the shutdown goes, the likelier the problems will escalate. If the SEC comes back 6 months from now, it could be mayhem, said one industry executive. It may be a while before business is back to usual at the SEC once the shutdown ends, as regulators will likely face a backlog of filings and demands. In other ETF news this week, the earnings slowdown could impact ETFs ahead of the earnings reports. Analysts have been furiously cutting their expectations for profit growth in 2019. As ETF.com's Summit Roy reports, over the long term, earnings are the lifeblood of the stock market and tend to dictate where individual stocks, sectors, and the broad indices go. Our third story today is from CNBC.com. Mortgage applications pull back 2.7% as rates turn higher again. After 2 weeks of sizable gains, mortgage demand cooled last week. Total application volume fell 2.7% compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. Volume was 3.3% higher than a year ago. Refinances, which are highly sensitive to weekly interest rate moves, pulled the volume lower. Applications to refinance a home loan fell 5% for the week and were 7% lower than a year ago, but were still at the highest level since spring. Borrowers saw a sharp drop in interest rates in December and jumped to take advantage at the start of this year. Last week, however, rates rose slightly. The average contract interest rate for a 30-year fixed mortgage with conforming loan balances increased to 4.75% from 4.74%, with points decreasing to 0.44 from 0.45, including the origination fee, for loans with a 20% down payment. One final tidbit of information is that today at 3:30 Central Time, Market Taker Mentoring will be hosting a webinar, a big one. It's called 3 Ways to Make January and February Your Best Trading Months of 2019. And we'll be focusing on earnings. That webinar, again, is today at 3:30 p.m. Central Time. That's 4:30 Eastern, and it's free. You can attend by simply going to markettaker.com/3. That's market, like stock market, taker, like take something, so 2 T's in a row, markettaker.com/3. And that, ladies and gentlemen, is news you can use for today, January 23rd, 2019, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.